All right, what's up, guys? So it is March 2nd. We're going into another month. So we're gonna just do a quick recap on the strategy again. Like I said, I always do the same old thing every month here on out. I've been trading since 2019, I would say, around COVID time frame. I started. Quick backstory. I've been trading, like I said, since 2019 around COVID time frame. I started off with trying to scalp, moved to intraday trading, and then I found a good strategy that worked for me, which was on the daily time frame, swing trading on the daily time frame. Reason being I chose this because I did have a full-time job at the same time. So I was not able to have a full-time job and scalp and intraday trade while I was still at work. All right, so with that being said, I will show you the strategy real fast so you can go ahead on before we get into the month of February. I just want you to look at this real quick, and I get a lot of questions. And before we move on, make sure you hit the like button and hit the subscribe button, hit the bell for notifications. And also, if you look in the link below, I do have a Discourse group where you can actually reach me directly and talk to me about the strategies. But what we're gonna do is we're gonna go over the trading strategy. Make sure you screenshot this so you can have it for you. All right, so we're looking at the daily chart trading strategy, and we're gonna go more over this through when we get through the pairs. So ensure you back test on any market you wish to trade. I would specifically tell you about this. I only look at the daily time frame, and I look at the weekly for the overall the trend. So I trade on the daily, but I look at the above trend, which is on the daily, the weekly, which way it's going. All right. It's the only two things I look at. I don't look at the monthly. I don't look at the 3 month. I don't look at the 15 minute. I don't look at the 1 hour. I get that question a lot. Like, hey, if you look on the daily time frame, do you go down to the 5 minute and you take trades? No. I trade specifically on the daily. I take my trades on the daily, and I look for the upper time frame, which is the weekly. All right. So wait for price to break the above or below the 20-period moving average. You can go two candle lows or two candle highs. Must completely plot above or below moving average to give a trading signal. All right. Then I use the 5-period ATR. That's where I place my profit and loss, or the P&L. I mean, not P&L, my profit and loss. I mean, my take profit or my stop loss. All right, that's the market order. All right, we're not going to get too much in the pinning order on this one. Let me know in the comments down below if you want me to actually show you the pinning order strategy, especially for those who actually have a 9 to 5 and can't be off at 5 o'clock. I can show you exactly how to set your pinning orders for swing trades. And this definitely works for people who have jobs. So if you or not patient, or you want to make things happen right now, I suggest you click off and you go to another channel, because I am not going to teach scalping or intraday trading on this video. All right, so make sure you screenshot this and we go from there. All right, so, and also right here, if the link is in the bio. All right, you can go to Gumroad as well. And I have my 1, 2, 3 forex playbook, simple rules, big wins, all from 2024. All right, it's got like 95 pages on there for that. My forex beginner guide right here from A to Z. It tells you from where to start at, how to read the candles, what brokers to go through, prop firms, things of that nature, and we go from there. All right, that's all on Gumroad. That is on my. Let me get rid of that, and that is on my link in the description. So if you look right here. This is from the month of February trading list. So if you look at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 11 wins. 1, 2, 3, 4, or 1, 2, 3, 4. And it's about 5 losses, because we have some losses inside of here, but then we end up going break even on some pairs. All right. So what I do every month, and this is like clockwork, I do look back at the previous month, right? But I look at, this is where we started in February, right? So if you look, we broke below. All right. Obviously, it broke below up here the previous month, but we waited for the retest. We needed it to come back over, come back down. 1, 2, and I call this 2 candle highs. For the sales, it's 2 candle highs. For the buys, it's 2 candle lows. And what I mean by that is the highest point price when it breaks below the SMA. All right, and if you look right here, we jumped in. If you look at the 5-pit ATR, so for the guys that, here we go, for the guys that are gals or whoever's traders, for the traders who need to know how to work the ATR, right? If you go down to here, like I said, all the way Barney style, ATR, true average range, you just click on it and it comes up, and you go down here, you go to the option wheel. All right, 5 SMA. All right, if you scroll right over the candle, it tells you, if you look at the bottom, all right, it says 1506. All right, so you go here, you go for 1-to-1 risk to reward ratio. That's what I do. The reason why I do 1-to-1 risk reward ratio, and I did it, I strategically made my plan to where my wins are greater than my losses, I will be profitable. All right. But for some reason, if my losses that month are greater than my wins, I won't lose my whole account because I risk manage properly. All right. And I've heard it all before, oh man, you can't be profitable with a 1-to-1. You need a 1-to-2, 1-to-5. You don't. It's all about probabilities in this game. And you do what works for you. Take the strategy and do what works. So if you come right here, boom, you look over 150. All right, you do 150 and then you just get out. All right, boom. All right, and you see that was the Monday, September, and you actually entered it Monday night at 5 o'clock. All right, always wait for the candle to close. Always wait for the candle to close. Always wait for the candle to close. Let me type that in here. Always, let me see. Always wait for the candle to close. All right, let's see if we can put that big. Boom. All right, let's see. So you can see, always wait for the candle to close. So if I was right here, that is Monday. I wait for Monday night at 5 p.m. Central Standard Time. All right, and here's the thing. The spread is bigger when it closes. You have to wait till your broker or whatever you use in spread closes, which is about 6 p.m. around that time frame. All right, and go from there. You could put a pin in order. You could have put a pin in order down here instead of coming right here. And I'm gonna be honest, half the time I don't get the right entry that I want, but it's okay as long as I can get somewhere close around the 5 to 7 pip or 10 pip range. It's fine with me because we're going for it. My risk is properly, and I have enough breathing room right here, at 150 pips. All right, so if you got in at Monday night, and it took pretty much 3 to 4 days, of 3 to 4 days to get out of this trade. All right, so let's move on to the next one. All right, specifically looking at February. All right, February started right here. All right, you look right here. We didn't do anything right here. Came back up, retest, broke above. Well, didn't really break above, but the price came back above, came back below, got in. If you look at the ATR, 180, 182, 186. All right, so if you got in on Monday, you actually got in out on Thursday again. All right, let's go. Let me mark this up again where it started at. And I do this every month. Of course, now what I do is I do look back to the previous month to see if the price broke above, broke below, see where it's at on the weekly time frame. As you can see right here, nothing right here. The JPY pairs actually gave us some good money this month, except for GBP, JPY so far. All right, so if you look right here, it broke above. Didn't break above, but it retest 1, 2. So you're looking at it was basically the third week or the second week. I'm sorry, the second week. All right, and then you jumped in on a Wednesday, and you got out on a Friday. All right. See, sometimes it takes a little bit longer. All right. So now this one right here is actually a win, but it could possibly be a loss due to the fact that it depends on how your broker, how your broker's spreads are. All right. And then where you get in at, because, if you get in down here, you could be, potentially a loss, 83 pip loss. But if you got in right on the money, and sometimes I'm gonna be honest with you, I get in right before the market closes because I know that I can get a good price right there. I can actually get the closing price that I want. Now, the thing about it is, if sometimes if I wait till 6 o'clock, it might bring me in right here. All right, like way down here, and then look what happens the next day. I get stopped out. All right, and I even had the right bias, but wrong entry. So that's something else you got to look forward to, and that's why I said, let me know. Hit the like, but hit down below pinning order if you want me to do a video about pinning orders. All right, so if you look at right here, it was that first week, and typically I don't take trades typically on the first week because I like the market to play out. All right. Sometimes I do, sometimes I don't. All right. But this first week right here was kind of choppy, first and second week, but got in right here on the Thursday, February 6th. And if you look right here, it didn't complete till a week later. All right. So you definitely needed some patience on that. All right. And let's go over here. Let's go back to February 1st. All right. So here's my biggest rule of thumb too as well. All right. You see 1, 2. All right. Right here. I like to get it when it's up here closer. Because if you look, and this is the biggest thing, from this price to this price, that's already 161 pips. 161 pips from the moving average. I don't want to jump in the trade. All right. Down here. I don't want to jump in. So if you look right here, 1, 2. All right, I don't want to jump in the trade down here because I'm already 161 pips away from the SMA. I want to be closer to the SMA. All right, I want to be closer to price. All right, so if you look right here, so from right here, this is 95 pips away, not 160 something pips. All right, so you was able to get a quick move right here, jump in around the 17th of the month, and get out around, depending on the spreads of your broker, around the 19th or the 20th. All right, so you got in on that Monday, got out at the end of the week. All right, you see how that works? Let's move on to the next one. All right, here, let's keep marking up. There we go. All right, you see right here, nothing right here, retest 1, 2. All right, and from right here, that is 99.4 pips. All right, you got in on that Friday, the 14th, and you didn't get out till Monday next Monday the 24th. So about 10 days. Some of these trades, that's why I say some of these trades take a lot of patience. You know, that's why I say when you're trading this, what you don't want to do is you don't want to continuously throughout the day look at these trades, because on this day right here, you're like, oh, I'm up. And then this day you like, oh man, I'm at break even. Oh man, I'm going back for a loss. Now you up here, you like, oh, I'm about to hit TP. Then the next day you back down again. And then the next day you actually hit. See what I'm getting at? So that's why I say only look at these trades once a day. And really the only price you're worried about is the entry price and the prices of where it's at the next day at 5 o'clock when the price closed. It can do all this moving throughout the day. If it didn't hit your stop loss, you're good to go. All right. So here's the one that broke even on this pair. If you look right here, we was close to it, and it looks like it was kind of consolidating, had a nice big range consolidation. If you look, jumped in with 46 pips, which is fine. We only lost 46 pips. With good risk management, you're good to go. And if you look right here, it broke back below, but we didn't see nothing. All right, and then we got it retest 1, 2. All right, and we got in right around here, which was 44 pips. So we basically were -2 on this pair, -2 pips on this pair, which is fine. All right. So we were basically at almost break even on this pair. All right. If you look right here, all right, it's the start of the month, right? All right, broke below. All right, we're not going for a sell right here because we didn't see no 2 candle highs over here. We see it broke back above 1, 2, no wicks touching the SMA. All right, and then we jumped in on this trade right here at 69.2 pips. All right, let's move on. Let's see. We got 3 more. All right, if you can see right here. All right, so this is one right here, but here's the thing. We wanted to reset. When I say reset, we want to, let me see where my handy dandy bird let me my tools at. Where's my tools? Where's my tools? Where's my tools? Let's see. I had it somewhere. All right, let's see what my, oh, here's my path. All right. Okay. Definitely not. That's the wrong one. Let's go back. Is that the path I want? All right. So what we want to do is, you see how it broke right here? All right. And then it retests right here. All right. And all this good stuff. All right. But what we like to see, the best interest, we want it to break above here and then break back below here. And then see this way we have the 2 candle highs right here. And then 1, 2, and then you look down below, it's 103.9. You got in at close, almost towards the end of the month, which was the 3rd week. And boom, you got in on that Friday, or that Monday, should I say. And then you got taken out with TP on that Thursday, the 27th, which is the last week of the month. All right, let's move on. All right, you can see February. All right, so we didn't do this one. All right. So here's the thing. For this month, if you look, broke above, and a lot of these things didn't play out to the last week for some reason this month. All right. If you look below, this did hit stop loss because, well, not stop loss. It did hit my take profit because when it was closer, when it got closer towards this area during the day, I just got out. I was like, hey, it's close by. I'm going to get out. Take profit, boom. All right. Don't care what happens after I get out. All right. Let's move on. All right. Now here are my 4 losses. All right. 5 losses. All right. If you see right here, broke above like the normal strategy does. 1, 2 candle high, boom. We got in for 49 pips. You see 49 pips. We got taken out 3 days later. All right. Got taken out 3 days later, which is fine. All right. Let's move on. A lot of choppiness on that one. All right. You see right here, it went up. Broke above, 2 candle lows right here, and there was 53 pips. All right, and so we got out with 53 pips, and we're good to go. All right, oops, I don't know why it's like that. 53 pips, boom, you got out. So actually, it took about, we got in on the 17th, and it took us out on the 26th, the end of the month, which is fine. It was 53 pips. We're good to go. All right, so this one we didn't get taken out of stop loss wise. I got out. I was like, we close to break even. It's the new month, so I'm gonna get out. Boom. All right. So with that being said, the same thing with this pair. It kind of played around a little bit. If you look at where February started at, it broke below. But see, here's the thing. I did not want to take this trade right here due to the fact this is almost 400 pips away from the SMA price or the simple moving average price. So we didn't do that. We let it come back above here. All right. We let the price come back above here, and then it broke back below 1, 2. All right. And we got in with 174 pips, and it played around still at the SMA. And so we just got out since it's the end of the month. All right. So I hope that makes sense. And I hope I didn't go too long with everything. Let me bring this back up. Let me see if I can remember where I put it at. All right, let's see. Okay, here we go. Just remember. All right, here we go. This is the strategy. Make sure you screenshot this again. All right, and hopefully that made sense. All right, and again, this is a swing trading strategy. Keep it simple. I know you guys came by, you've seen a simple strategy that actually works. Here's the biggest thing. All right, you don't have to win every trade. You have to use your risk management properly. Use it properly, and you can trade all these pairs. But here's the thing: you got to put in some work and back test. You have to back test. All right, and then again, like I said, if you need more instruction, you can go to Gumroad. All right, and here's my strategy, and the strategy right here is this is my risk management trading plan to show you how to break down the strategy. All right. And here's right here, the risk management part of the strategy in 1, 2, 3 forex playbook trading strategy. You can hop on that one. And then this one, it shows you about 95 trades along with the strategy of the previous year from 2024 to 2025. Has about 95 pages in there. Good deal. Other than that, you guys have a good March trading month.